Hi, I'm Richard Vague with Tycos. Recently, we spent time with you on the China dilemma. Its economy is slowing down because it is massively overbuilt and overproduced, and its choices are to either slow down building and production, to give the excess time to be absorbed and debt time to be repaid, or keep the lending spigots flowing and overbuild and overproduce even more. That second choice is a form of kicking the can down the proverbial road and delaying the day of reckoning. So neither choice is good. We also said that China has regularly taken strong action in those two opposing directions. Often, for example, a couple of years ago, it chastised its lenders and builders for the excess and imposed 3 red lines that limited further lending. But only months later, seeing economic weakness, it reversed course and pushed its lenders, businesses, and households to lend and borrow even more. No other country is even close to being as schizophrenic on this than China, and last week, for fear of missing its overall 5% growth target, as if on cue, it introduced the most massive stimulus package since the global financial crisis itself, way back in 2009. The business press pulled out all its best vocabulary to describe this with words like massive, large-scale, aggressive, unleash, triggered, bombshell, rocket boosters, you name it. And China's stock market rejoiced, at least for the moment. Here are the details. First, as regards monetary policies, it cut its reserve requirement ratio for banks by 50 basis points to boost lending activities. That increases liquidity within the bank and creates a little more room for banks to lend. It also cut interest rates for existing mortgages and lowered minimum down payments to 15% from 25% on both first and second home loans. There's no better way than lowering down payments to boost lending. PBOC Governor Pan Gongxing announced new lending facilities on top of all this aimed at providing buying pressure on Chinese to benefit Chinese equities. Debt, as we know, in the U.S. that happens through margin lending, debt is the stock market's friend. Further, megacities Shanghai and Shenzhen are now planning to lift key home purchase restrictions in coming weeks, joining a long list of smaller cities that have done so to ease years-long property crisis. While on the surface, these monetary policies seem like a step in the right direction for China's economy, there are a few reasons why this effort may be a little too late. For starters, China's reserve requirement ratio has been steadily declining since 2015. If demand for loans is low, this newfound liquidity in banks will have a little effect on loan growth. If they're not asking for loans, just having a little bit more money won't have anything to do with increasing that demand. In fact, just last February, Chinese banks had their reserve requirement ratios dropped by 40 basis points, and as we pointed out a couple of weeks ago, loans still managed to decline. And second, mortgage rates are already at historically low levels, so a drop in rates may have very little impact on household savings and may not be enough to increase demand. And finally, China has announced it will begin to allow homeowners the opportunity to refinance their existing mortgages at lower rates. This will help, but is not likely to be a significant benefit just because of what's happened previously. So there's genuine concern over the effectiveness of these policies on credit demand. But for argument's sake, let's assume these policies work and loan growth takes off. It's reasonable to guess that if lending grows at even half the rate of the 2009 stimulus, these policies could bring an additional 47 trillion yuan or 6.7 billion more in lending. And that's about 16% more non-central government debt than is currently in place. Now, in addition to all this, China also ramped up its spending to prop up the economy. This is central government spending. And of course, that necessitates increased government borrowing. These are the so-called fiscal policies, and they include Sovereign debt issuance, they have a plan to issue 284 billion more in sovereign debt as part of the fiscal stimulus. President Xi also ordered sufficient fiscal spending with details expected in October, including increased subsidies for consumer goods replacement and for business equipment upgrades, and a monthly allowance of about 800 yuan or $114 per child to all households with 2 or more children, excluding the first child. China will also distribute a one-time allowance to disadvantaged people ahead of a national holiday week, according to a government statement. While 2 trillion yuan, or 284 billion, sounds like a lot of money, half of the proceeds from these special bond issuances will be used to help pay down some of the massive debt load the local governments already hold. The other half will be used to stimulate consumption. A good guess for all the things I just mentioned on the fiscal side that these policies will increase government spending by 1% of GDP and increase central government debt by about 6.3%. Now, all of this will perhaps help China reach its 5% growth target, but that is a lot of extraordinary effort just to stretch to make that very arbitrary 5% goal. In fact, it makes little sense for China to even have a 5% growth policy in the first place, since it is already suffering in excess, and more growth will create even more excess. It makes little economic sense, but it makes a lot of short-term political sense, since China is petrified by such things as its rising youth unemployment and the potential that brings for political unrest. So there you have it. No good choices, and we should expect China to continue its schizophrenic ways, veering between clamping down on lending and engineering increased lending. You might well ask, what is the solution? Well, there is a solution. It's fairly self-evident, and it would work, but it is also so far outside any economic norm, so heretical, that it'll never be considered. But put simply, if you have exorbitant excess, as China does, you should enact policies to remove that excess, to literally or figuratively plow it under. China now has almost 100 million empty dwellings, enough to house the entire population of most countries many times over. And beyond that excess, if you have far too much debt, you should enact policies to forgive that debt. We refer to that as debt amnesty or debt jubilee, but that, again, is even more heretical. However, it's at this point we are reminded that ancient civilizations, we're talking Babylon, Israel, Egypt, used to do that with some regularity, though it has long since been made anathema, since it involves profound wealth transfer. Our old friend King Hammurabi proclaimed debt amnesty on 4 different occasions during his reign. Notably, kings that didn't proclaim debt amnesty were vulnerable to invaders who would co-opt that king's citizenry by promising debt amnesty if they would side with the invader against the king. The world now has at least 232 trillion in total debt, up from 60 trillion only 2 decades ago. As that total reaches 300 trillion and 400 trillion, we may have more occasion to reflect on the debt amnesty practices of the ancient. Yet China will most certainly not do that, which means they will most certainly implode politically at some point, probably within the next generation. That's the level of excess we see within that country. So perhaps we'll explore debt amnesty a little further sometime down the road. But that's it for this week. Thanks for tuning in, and as always, keep the conversation going in the comments below.